The last time we had Seth Streeter on the show, we ended our conversation by talking about retirement and by showing some savings target numbers that may have taken a lot of people by surprise. Seth is with Mission Wealth Management in Santa Barbara, and he's back to recap those numbers and to talk about how we can maybe achieve some of these numbers, because it certainly took me but I was glad I got to see them, because let's talk reality, right, when it comes to money.
Exactly.
So let's throw that graphic up and show folks what we're talking about. And you did a very nice job at divvying up, depending on how much we make and how old we are, how much we should be saving so that we can live the life of a $60,000 a year individual once we retire, right?
Mm-hmm. Exactly.
So take, for example, age, what I'm closest to, 35. If I make $50,000 a year, I should be saving $1,272 a month at least.
Exactly.
Saving that much a month.
Per month. Exactly. And that's assuming that you can earn an 8% average rate of return and that inflation remains low at 3%.
So even in that case, there are a lot of factors involved. So that's a minimum. And that in part is because of the fact that the Social Security and pension plans, that whole phenomenon, the other two legs in that triad, are just not dependable, right?
Exactly. And maybe as that Paris Hilton video created some awareness for people, this graphic can also create some awareness, which is the fact it comes down to we have to control our future. And we have to be the ones to really look at what we're doing today and say, if we keep doing what we're doing, will that get us to where we want to be in the future?
Good point. And also, by the way, dramatically shows how the older you are, you know, when you start saving, the more you're going to have to save. So start early. It's never too early to start saving. All right, so the question is now, you've shown us the numbers and you've got our attention. Now, what do we do to get to that point?
Exactly. It's a great question. Well, I think the first step, Gabe, really is to have that awareness and really open your eyes and wake up and say, if I keep doing what I'm doing, will I get to where I want to be in the future? And if not, you either need to reframe your perspective of where you'll be in the future, or you need to take action. So it really comes down to taking action. Okay. And I'd say the first step with that is to seek counsel. Get advice. Maybe it's a family member, maybe it's a friend, someone you trust who you know is successful at accumulating wealth and managing wealth, or maybe it's a professional firm like ours. But make sure you get professional help to say, hey, if I'm not on track, what do I need to do to get there? Right.
And it's got to be someone that you trust. But that personality factor is key to me, I think, because you've got to be able to trust what you're saying.
Absolutely. You have to trust them, you have to relate to them, and you have to know that they have expertise.
All right. And I like your personality, so we got that thing done. What about, what a lot of people will do is they'll let their emotions maybe get in the way, and they think, I am doomed. Could it be that maybe it's not as bad as people think, even when they're looking at some pretty dramatic numbers?
Absolutely, and that's why we think it's so critical as a first step is to start with a financial plan. Because in the financial plan, we often find that clients might have a number of factors that really already put them ahead of the game of where they thought they were with regard to achieving financial security. So a couple examples of that might be if they own real estate. Maybe they might turn that real estate into a rental property at some point in time, or maybe they'll downsize out of Santa Barbara and move to another location and have home equity there to utilize. We're also seeing a number of people that are receiving inheritances that will really impact their financial future, as well as maybe working part-time into retirement and having some level of income in the future, or future career opportunities where they might have higher earning power in the future to be able to save more.
Talk to me about a Roth IRA. What is it, and who should consider maybe opening one up?
A Roth IRA is a great tool. If any viewers have not learned about it, they really should. It's an after-tax savings vehicle, and the monies that you put into the Roth IRA will accumulate tax-free, meaning they will grow tax-deferred, and then upon distribution, they'll be tax-free distributions. Unlike a qualified plan where when you make distributions, they're taxable as ordinary income, a Roth IRA is tax-free. There are certain limitations as to who can contribute to them, but if you qualify, it's a great, great tool.
Another recommendation that you gave me, which is a no-brainer, is throw more money in your 401k.
It's a no-brainer. It really is. I mean, every dollar you put into your 401k saves you 30 to 40 cents in taxes on that dollar. And then that money accumulates tax-deferred. Maybe there's an employer match as well. It's an automatic contribution, so it's out of sight, out of mind. It's an easy way to save. So I would challenge every viewer to increase their contribution, maybe even 1%. Call tomorrow, increase it 1%, and that'll be a step in the right direction.
All right. There's more to talk about. There's Seth's contact info, 882-2360 or missionwealth.com.